Hello friends, and a very warm welcome to our new series on Advanced Candlestick Patterns. In this series, we're going to understand about some prominent candlestick patterns that every trader should know about. Candlestick patterns play a key role in identifying reversals in the markets, and traders who have the knowledge of using them correctly have an ultimate edge in trading. However, a lot has already been written and a plethora of material is available on the use of these patterns. So, how will this series be any different? You might ask. Well, to begin with, in this series, we're going to be focusing on some of the lesser known candlestick patterns. Yes, we're talking about patterns that are effective and elusive. Patterns like bullish engulfing, bearish engulfing, dark cloud cover, and etc. are very common, and a lot has already been written about them. So we would definitely not like to repeat and reiterate what is available and what you already know. We would rather focus on some of the advanced patterns whose knowledge will be extremely valuable in analyzing the markets and in providing you with an ultimate edge in trading. We will demonstrate the effectiveness of these patterns with some actual examples to enable you to implement these in your trading journey right away. Do note that these candlestick patterns work best on higher time frames, especially for swing and positional traders. Therefore, whatever patterns we discuss today should be observed on the daily, weekly, and monthly timeframes for better results. Without wasting any more time, let's get started with the first two patterns in our Advanced Candlestick Patterns series: Bullish and Bearish Counterattack Patterns. This trend reversal candlestick pattern consists of two candles moving in opposite directions. This can occur after a downtrend in prices or even in an uptrend in prices. The indication is regarded as a bullish counterattack pattern when it is observed during a decline. Conversely, the indication is also known as a bearish counterattack pattern when it is observed in an uptrend. So let's quickly understand how do we identify these patterns on the price charts. First, let's understand how to identify a bullish counterattack pattern. A bullish counterattack candlestick pattern appears at the bottom. There is a steady downtrend in prices where the first candle is red and the second candle is green. The second candle opens after a gap down but closes at the closing price of the first candle. Now let's understand a bearish counterattack candlestick pattern. A bearish counterattack candlestick pattern forms at the top. Over here, there is a consistent uptrend where the first candle is green and the second candle is red. The second candle opens after a gap up, but closes at the closing price of the first candle. So how do we trade these counterattack signals? Let's understand. Number one, there should be a clearly defined uptrend for a bearish counterattack signal, and similarly, there should be a clearly defined downtrend for a bullish counterattack signal. Preferably, these candles should be wide range candles, which shows that the bears or bulls are firmly in control. Number three, traders should also look for a confirmation with other technical tools to identify a bullish, bearish counterattack signals. For example, a bullish counterattack pattern at the lower end of the Bollinger Band with oversold RSI levels would signal a powerful reversal. Once the pattern is spotted, an entry can be triggered. Then, once the high of the pattern is crossed, a stop loss can be placed below the low of the pattern. And one can aim for a minimum target of 3:1. That means thrice the reward for the risk in the trade, and vice versa for bearish patterns. Now let's examine some practical illustrations of bullish and bearish counterattack signals on actual price charts. First, let's look at a bullish counterattack signal that was identified on 28th January 2021 on the Bank Nifty chart. The bullish counterattack signal at the lower end of the Bollinger Band and support levels suggested a strong potential for a reversal. And as you can see on the chart, a strong reversal followed after the bullish counterattack signal was identified. Now let's also look at a bearish counterattack signal identified on the SPI chart. As you can see, the bearish counterattack signal formed at the upper end of the Bollinger Band with overbought RSI levels suggested a strong possibility for a reversal. And as you can see, a strong reversal followed after the bearish counterattack signal was identified. And with this, we can effectively wrap up today's video. We hope that you gained some valuable insights from watching this video and learned how to identify and trade these counterattack signals on the price charts. As quick homework, we would recommend that you also try to identify these patterns on actual price charts and just observe their outcomes. Let us know of your findings in the comment section below. If you would like to learn more about our offerings, don't forget to visit www.hedge.in today. We'll meet you again soon with some more advanced candlestick patterns in our upcoming sessions. So stay tuned. Thank you for tuning in today. Happy trading and investing.